Welcome back, everybody, to Volatility Trading Strategies. So I did an article recently for my website, and I think it's an important enough subject that I do also want to give it to all of you on the YouTube channel as well. Because a lot of people out there, they just don't spend enough time on compound interest calculators, and they don't realize that very small amounts of money can add up to huge amounts of capital when compounded over an investment career. So that's what we're going to talk about today. I'm going to actually show you what a big difference small savings can actually make. So if you like my work, if you support the channel, definitely subscribe down below, give the video a like for me, and let's talk about the power of compound interest. So this is the VTS website, volatilitytradingstrategies.com. And you can always come here periodically and see if I've uploaded anything new. If we go over to the articles, I'm talking about this one, article number 610. It's called Monthly Challenge, Track Expenses, Save and Invest an Extra $100 a Month for 40 Years. Now, where this is coming from, this is the YouTube channel. Exactly a year ago, I did a video. It's this one right here. It's called 12 30-Day Challenges for 2020. And it's exactly what it sounds like. It's independent challenges that I was going to do every month, and I'm inviting the VTS community to follow along and join me in the fun. Sometimes it's easier to do things when you know other people are doing it with you. And those challenges covered a broad range of subjects. So we've got some finance and investing, budgeting type things, career challenges, health, relationships. We've got a pretty good mix here. And this one for January, track all expenses to the penny. I'll leave a card at the top of the screen where you can check out the video later and see the full explanation. But essentially, you're just going to track your expenses. You can do it with a spreadsheet like I do, or you can just download a free phone app. There's millions of them these days. But you're just going to be tracking your expenses for the month of January. And the point of this video, if I scroll down a little bit here, is that people often don't even realize how they're wasting small amounts of money from day to day and how much those small amounts of money actually add up to at the end of the month. So maybe you paid $5 or $10 for parking when you could have easily just walked 5 minutes or maybe taken the bus. You're buying a couple $6 coffees every day when you could easily just buy a cheaper one or maybe just bring your coffee from home. Maybe you're paying some unnecessary fees whenever you do your banking, or you don't have your credit card set up to capitalize on all the points you could get. There's a lot of places that all of us, even the most frugal people, could probably clean up a few of those expenses. So that's what the challenge is. Just do it for 30 days and find a few areas where you can do it. And like I said here, even if it's just $100 a month, that can be a significant amount. So what I'm showing in this chart here, this is a person who starts with $100, and because they have a better understanding of their expenses, now they're able to save $100 a month. Not a lot of money, just an extra $100. They're going to be investing successfully and getting an annual real rate of return of 7%. Now for this example, I'm assuming that a career time frame is 40 years. Maybe you start doing this at age 30 and you retire at age 70. But 40 years later, you can see down here, that measly $100 a month would be an extra $270,000 in retirement. Now this is a typo, it's supposed to say $48,000, but of course there's $48,000 of that money that was yours. You added $100 a month for 40 years. But the remaining $222,000 was pure investment results based on adding $100 a month and making a 7% rate of return. That's not a small amount of money. An extra $200,000 in retirement can really go a long way, and that's only on a 7% rate of return. What happens if we do a little bit better than that? So this next chart is going to change the assumptions a little bit. Let's say we got a slightly higher rate of return. There's a little shameless plug here if you were trading with VTS, but I think that's a valid point. We've been crushing the market for quite a while now. If you go to the front page here, you can see the leveraged portfolio has an annualized return of 30%. And the more conservative strategy is at 20%. I always like to give investors perfectly reasonable expectations of return, so let's say it was half that much. Like I'm showing in this second chart, let's say it was only 10%. Well, still, saving $100 a month at an annual return of 10%, now it equals an extra $615,000 in retirement. There's a lot of people who are not going to get to $615,000. That's a lot of money. And imagine being able to do it with just saving $100 a month and a 10% return. I know people are going to ask, so I'm just going to go through a couple more examples here because $100 a month is perfectly reasonable for a lot of people out there. And for many of you, I'm sure you can bump it up even further. I mean, so far we're just talking about saving money on coffee and parking and banking. What happens if you really dive into it and start saving money on mortgages and vehicles and vacations? Now you might be able to save $500 a month. And if you were to do that, Start at $500, make an annual return of 7% a year, capital gains tax of 25%, monthly addition of $500. That's the potential savings after income and, of course, diving through your expenses and seeing where you can save a little more. And then over a 40-year investing career, having wage growth that slightly outpaces inflation, just 1%. Long term, it's much higher than this, but again, I do like to be conservative, and also I think we can all admit that the government numbers on inflation are not exactly accurate. So let's just use a very conservative 1% wage growth over inflation. If we take a look at what this equals, after 40 years, we're talking about $833,000. Again, that is way above the average person's retirement account, and it can be achieved with very realistic numbers. If we just make one change to that and say the person makes a 10% rate of return, well, now look what happens. After 40 years, this is now $1.35 million. Of course, ignore the heading here. I don't have time to change it on the fly here. But lastly, what about the $1,000 a month? This is a value that I often mention whenever I'm going over these numbers with people. I fully realize that a lot of people are not going to be able to do that, but definitely some of you are, and even more than that. But also, I think saving $1,000 a month is a really good target goal. So let's see what $1,000 a month at a 10% rate of return would be. Again, I didn't change this. It says 7. This is showing a 10% rate of return. And at the end of 40 years, this person has $2.7 million. Again, anywhere from $800,000 to $2.7 million. That is a very comfortable amount of money to have in retirement. And even the high end there, the $2.7 million, it's not like we're talking about unrealistic expectations here. That's saving $1,000 a month, making a 10% rate of return. And you can retire a multimillionaire. That's the punchline of this video. It's to give people hope. Now, definitely, if you're already 50 or 60 years old, the 40-year time horizon isn't realistic for you. But that's not what you want to be focusing on. The point is, no matter where you are in your investing time horizon, no matter what your income is, no matter what situation you're in, for the month of January only, join me in this challenge to track your expenses and see if you can find a few places to save money. Small amounts of extra savings can make a big difference when compounded over an average career time frame. This last part, don't underestimate the power of compound interest. I don't know if Einstein actually said this, but it's usually attributed to him. Compound interest is the 8th wonder of the world. He who understands it, earns it. He who doesn't, pays it. Those are very wise words from a pretty smart guy, and he's absolutely right. Compound interest is amazing. So whether you have 10 years, 20 years, or for my younger followers out there, maybe you do have 40 years, and that is to your advantage. But no matter what, check out that video for the 12 monthly challenges. Of course, last year was a little bit rough for a lot of us, so basically that video was scrapped right from the beginning. Early March, the challenges ended and the fun was over. But this year in 2021, if you want to participate, you can go ahead and join me in those challenges. For January, track your expenses, save as much as you can, and get ready to start investing that money so you can have that comfortable retirement down the road. And if you do want to check out my investing strategies that might help you achieve a slightly higher rate of return, you can always go on the website, claim your free trial, and join the VTS community. You're always welcome. Thanks for watching. Thank you so much for watching the video. So don't forget to subscribe to the channel and go check out my website right here. There's tons of articles and videos on there, as well as a free trial to join the VTS investing community. What have you got to lose? Come see how I personally navigate these unruly markets. See you next time.